Good morning. Welcome to Forex In Four. Today is Thursday, November 17th, 2011. Alrighty, we're starting out with the euro again, and you can see here we've had a lot of risk in the marketplace going on for what's taking place over in Europe with the yield situation. Okay, right now, on average, eurozone bond yields are at the highest levels that they've ever been. So when you take into account Germany, France, and then obviously the troubled nations as well, that overall average highest it's ever been, which means refunding costs there are going to be difficult. Okay, we know about the debt problems there. Let's see, in some specific regions, Spanish debt, okay, going near highs. They're having problems there. They've lowered their GDP outlook. All right, in Italy, we found out that new Prime Minister Monti is also going to serve as the finance minister. That's probably a good thing. Increased, they survived a 3-month confidence vote that's going to allow them to supposedly put in the austerity measures, but until that's a done deal, we're going to have to see. And right now, you've got a clash between France and Germany over the role of the ECB in this whole crisis and whether they should just come out and say, listen, we're going to be the buyer of last resort. The problem with that is that it's gotten to a point so much that if they do say that, then the market's going to push it to make it a reality. So, listen, had they come out early on and done like a bazooka type thing that Hank Paulson did here in the U.S., all right, we would have never been in this situation. There would be no reason to sell into it, and they probably would have thwarted the crisis ahead of time and been out in front. But now they come out and say, okay, we're the buyer of last resort. Guess what? They're going to end up buying all this stuff, and I think Germany knows that, and they're not willing to do it at this point. So, a lot of problems still happening with the eurozone, and we've got these estimates for GDP and for economic activity, which is slowing. So you can see here we sort of bottomed out here, had a little bit of a support, had a 134. Actually, John on this line in there, it's about 134, say 35. That looks like it's been holding pretty well. Maybe 25 is a better number, but you get the idea. And it also looks like we're about to hit this narrow range heading into the weekend. I just want to show you the pound here real quick. This is interesting, but in the UK, we've actually got the pound moving up a little bit higher. Now, they had consumer confidence figures that came in way worse than expected. The situation over in the UK is not pretty. Reading was 36. They were expecting 43. But on top of that, their retail sales have been good. All right, and I think, every time I look at the data coming out of the UK, I know everyone says, oh, it's weakening, they're doing poorly, blah, blah, blah. The numbers always seem to beat. All right, retail sales figures came in at 0.9% versus a negative 0.2%. All right, so you tell me, that's a huge beat right there, and it shows that there's signs of life in the UK economy. I mean, I realize, these guys in government over there keep saying, oh, these things look so bad because we've got austerity and we're cutting back, and we're going to have to do more easing. But the truth of the day is that the UK economy is functioning just fine and is doing what it's supposed to be doing. That's cutting government spending, reducing deficits. All right, monetary policy is probably too loose over there, in my opinion. But that's the inflation that they're seeing, and if they can deal with the political ramifications and fallout from their citizens, then so be it. So the economy there keeps trugging along, and that's one of the things that we have to consider, that when you talk about GDP figures, all right, going down because of government lack of government spending, guess what? That's not a bad thing, all right, because it's the kind of thing where governments have overspent for so long. When economies are booming, these guys write blank checks. Who knows who's covering it? And then all of a sudden, when it's time to actually pay the piper, you realize you got this huge, massive deficit. All right. In this country, what do people say? Oh, we're going to raise taxes. Let's get some more revenue in here to cover all the bad checks we wrote. Well, guess what? That's not what you want to be doing. You want to stop writing checks to things that we have no need for. All right. And then if you have a revenue gap after that, then sure, come around and try and close that with some revenue. But it's just amazing to me. So the UK is actually on course to doing what it's supposed to be doing, and it looks things look, in my opinion, pretty decent over there. Aussie rolling down on this risk aversion thing, just sitting just above parity here. All right, you can see that there's been a slow decline happening there. They actually got average weekly wages were up a little bit higher than expected, and that's a little bit different than the numbers we had yesterday, which showed the wage cost index, which was lower. So if wages are going up there, then they still might have a chance at, I don't want to call it inflation because you don't want to say the I word, but it could be a situation where things aren't as bad as they seem over there. So what are we going to get here for the rest of the day? We've got U.S. building permits and housing starts. All right, expecting around 600,000 for that. We're expecting building permits to have risen 1.9%, and then we have initial jobless claims. All right, last week came in at 390,000. This week we're expecting 395,000, which, if we can get out of the fours, that's going to be progress in the right direction. All right, we also have the Philly Fed coming in, which is going to show some economic activity. And then lastly, we have Fed Governor, one of them speaking today. I think it's Dudley, the Dove, whoever he is speaking. So it's going to be interesting to hear what he's got to say. But I think that they put Bullard out on CNBC this morning, who's also in that same camp. So I think they're really trying to get the story out that perhaps more easing is coming here in the U.S. and that they're talking about the data keeps it's slowing, but one day it's slowing, but the other day it's fine, and they're trying to make a case for more easing. In fact, they're trying to jawbone the market into believing that there's going to be more easing. All right, because that's better to do than actually doing the easing. All right, when you flood the market with dollars, guess what? You see that inflation. And I just want to show you yesterday, we talked about oil. And it was interesting because right at 8:30 a.m. yesterday, that's when, boom, this thing really took off and started running. And you can see oil got up to 103. It's since pulled back. Well, that came out on the CPI data release. But what also happened is that there's a story that the crack spread trade is unwinding. So basically what this is, we're looking at West Texas crude here. This is U.S. oil. This is the oil that comes from the U.S. primarily. And then there's also Brent crude, which is more of a worldwide measure. And there's a spread between the two. They have different prices. And essentially what's happened is that they're saying that they're going to take this pipeline in reverse. It used to bring Brent crude to market. Now it's going to bring West Texas. All right, so that meant the demand for West Texas went up, and it meant that the demand for Brent went down. Okay, so what that does is that narrows that spread. So you see that West Texas went higher. So, it's just interesting to me, though, that it came out that, that move started on the CPI data announcement. And it's kind of, maybe the market knew about this and was just waiting to make sure that the inflation data, wasn't, too high to a point where they think that the Fed might raise rates. I mean, who thinks the Fed's going to do that right now? The Fed's going to be on hold for a very, very long time, and this market's just going to start to move, sideways to higher as far as prices go. I mean, I still think there's major inflation out there, whether or not they tell you there is. You can see it in your everyday life. All right. The only thing that's keeping inflation low right now is the fact that housing prices keep declining. If you have something that's food and energy prices moving up, housing prices moving down, they negate each other. Guess what? There's no inflation. Well, guess again. Food and energy is something that everybody needs. All right, housing is something everybody needs as well. But you don't have to buy a house. You can rent. Okay, you can do short term, whatever the case may be. But at the end of the day, it's an asset versus something where people are moving in. And the other thing about housing too is that it depends on the level that you want to get involved with the market. All right, you can spend a lot of money on a house. You can spend a little bit of money on a house, depending. So it's really it does an injustice to what the actual numbers are doing. And when you see something like oil over $100, which is where we're sitting right now, all right, and we're going into the winter heating season, right? Starting to get cold, and now people need to heat their homes. There's going to be more demand. Guess what? Prices are going to be higher. It's going to happen. And I mean, how they can say otherwise is, it's disingenuous to say the least. So that's really what's been happening there. Just want to show you dollar yen. You can see here, boom, we're just settled in right now to just above, just right around 77. And we had the intervention, a couple of when was it, last week? Oops, let me pull it back out. And now it's just sort of been just tick, 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 tick. And they're really, the market's moving very slowly to strengthen the yen again. And it's the kind of thing where, this is the pair that the Japanese government and the Bank of Japan looks at when they decide, hey, our currency's too strong. We need to weaken it through intervention. All right, so, market's been treading very lightly on this pair. But take a look here. All right, look at euro yen. You can see, hey, wait a second, euro yen, boom, making new lows. All right, let me go to the daily chart here. We're coming back down to this area where, boom, right back down to look close to parity. I mean, gosh, we're at 103 here, and then let's look at pound yen as well. And you can see the same scenario happening. So this is where the intervention took place. All right, right at this level, pound yen beneath there, and same thing with euro yen. So we're going to keep an eye on Japan, see if they want to step into this. But right now the risk is coming out of euro. Okay, we know about rising bond yields. Okay, we know about their refunding needs, and we know about the problems that they have with the austerity that needs to be imposed. And these are all issues that aren't going to take place overnight. And it's the kind of thing where you have to sit there, and the ECB has really dragged its feet on this one, and if they get dragged into this thing reluctantly, I don't think that's going to be a pretty picture either. But at the end of the day, they need to do something there. So that's really what's happening. So coming into the weekend, we've got risk aversion start the morning, and we can look at S&P here. S&P is down a little bit, and we're going to have to see what we're going to do here. But this 1225 area is an important level on S&P. We'll see if it can hold. Maybe get down to say 12. I don't know, 1220. All right, as long as we're up over 1200, we're going to be all right for now. But we're going into starting in holiday season here in the U.S. and around the world. So who knows what's going to happen going into the end of the year. So that's what I'm looking at today. I mean, it's just been one of these days where the markets are just sort of tightening these ranges a bit. And yesterday I was talking about buy the dips and sell the rips. Well, we didn't get that afternoon rip yesterday like we would have liked, but that had been in play for a little while. So anyway, just keep the trade into the short term. That's usually the best policy right now, and wait it out and see what happens. So that's what I've got, folks. Good trading to all.